Hey, this is Jim Du Bois again with Craftsman Mindset Consulting. Here to talk to you a little bit about, particularly for the crossing, the business competencies kind of schema for understanding the financial competencies that we expect students to be able to start out and understand and actually do work in bookkeeping and understanding financial reports. So it doesn't mean they have to know everything at the beginning, but it's a good way to start an understanding that you can attach new meaning and more in-depth understanding. So this is going to be really cursory, really overview kind of thing, but I just want to get through it rather quickly so then you can learn it and then share this kind of schema with your students so they can begin to understand in a more deep way and be able to do the competencies that they need to be able to perform to run their companies. All right, let's start out with bookkeeping and how the business is operating. So in the lean startup canvas, we talk about costs, we talk about revenue streams. Well, it's not much different here. When we talk about revenue streams, we're talking about and documenting what's going on with the money that's coming into your business. Whatever business you're running and the revenue that comes into your business, if it's a Bark Bites company or a candle company or a tree team, there's money coming into your business. So let's look at your business and your business account as being this trash can. So there's an economic engine. There's some money being generated by some activity that you're doing at the business. And those dollars are flowing through. You're bringing them in through your accounts receivable processes, which you'll need to determine and get down solid. So every transaction, every amount of money that comes in, all the services and products that you have that you're selling to bring in this kind of revenue, that's under kind of your accounts receivable group. And then those processes would be documented. So as the money comes in and drops into this bucket, it starts to collect. But before it collects too fast, you realize that you actually have some accounts payable issues. You have some things that some expenses you're incurring. You have to pay people back or buy materials or buy gasoline or buy something to make your product. So that's the accounts payable process side of it, that the money's coming out of the bucket and then being spent for costs of the goods sold, chainsaws, whatever it is. There's got to be a way you document your costs, your taxes, and you're paying your taxes, which we'll do more later. You have payroll, you're paying people to do the kind of work for you, etc. There's some other things, website costs that are more fixed compared to variable, which would depend on how much if you're not going out on jobs, you're not driving your vehicle, there's no gas cost for that, etc. So money comes into the bucket, money goes out of the bucket. Pretty simple concept. What's left at the end of the month or the end of the year or at the end of whatever time period you decide is actually, you can create a financial report out of that. That financial report ends up being an income statement. There's three major reports that you can do in your business that when you're a mature company. In the beginning, everybody needs to do a profit and loss. You understand at the end of the month, if you have less money than you brought in, that was a negative month. It wasn't a good month. You had a loss. But hopefully your businesses are generating revenue. You're not spending too much, and you're finding that in your bucket or your bank account, you're finding that you are accumulating more money each month. So that would be a profit. So profit and loss statement, or another way to put it is an income statement. It's measuring the income of your entity about your business, what's coming in, what's going out, and what's left at the end of the month or time period, quarter or year. Then the company, as you start to have a mature company that's growing and you have been doing this for multiple time periods, you start developing a list of assets. You might have in the tree teams that run around the state, they start collecting chainsaws, they start collecting vehicles and chipper shredders and stump grinders. Those are assets that the company has. They need to be valued, and there's ways of doing that value and looking at how much that is worth. And then you also, if you had to borrow money to buy those assets or to have the cash on hand that you have as part of an asset, you might have liabilities or money that you borrowed to get those assets. But that has to balance out whatever's left over. If you have borrowed no money but you have $10,000 in assets, that means your owner equity has to balance out. That means your owner's equity, or how much the owner has as far as a stake in the company, would be the $10,000, because it has to balance 10,000 in assets, 10,000 in owner's equity. Real quick overview, think of a balance, because it's called a balance sheet. And then the last one that I want to talk about is the cash flow statements. It's the third of the major financials that most businesses, including the Crossing and other organizations, have, is a cash flow statement. Typically, that is tracking the money in and money out. It's projected over a period of time, and then also compared to actuals from previous years and then the current year, so that you can make projections. What undermines most businesses, even a small business or the Crossing, is if the cash flow gets out of whack and you run out of money and you can't pay your bills, you can't make payroll, you can't pay the rent. That's when businesses usually have trouble. So managing your cash flow is really important. But that's a nuts and bolts quick overview of some of the financial reporting and the idea that you have to track all the money in and make sure you're documenting as transaction, and then where that revenue came in, and then you have to track where the revenue is going out. This is kind of the bookkeeping process, and you will have processes to document all of this work with your students at the Crossing. Thanks for all you're doing. I'm going to keep praying for you. You guys keep working hard and service the kids and have fun doing this. This should be a blast. Take care.